So very welcome, everyone. It's time for our good old Thursday night webinar. Happy to be with you Thursday afternoon, Thursday evening, Thursday morning, wherever you are. Happy to be with you guys. We have some good things to discuss. And we also have kind of a little bit of a market where we're in a bit of a holding pattern right now. I haven't really put any new trades on for a week or so because I'm kind of, we're kind of in this space of what do we do? How do we manage the coming volatility? And so I want to spend a little bit of the webinar today talking about how I think it will be very, very good. And many of you guys have talked about this with me, and I've talked about it with you. It'll be really, really good to really reduce your risk. We're going into a pretty volatile time, pretty uncertain, little period of time that we'll have with the election. So there's no need to put ourselves in front of any extra risk, right? So what I would recommend everybody right now is start thinning your positions and start, if you have covered calls and you can get out with some profit, start looking at doing some of that stuff because we could have just absolute pandemonium happen and chances are it might and it might not. Typically, whatever the market is expecting and all anybody is talking about right now is how everything's going to go crazy, right? How the market's going to go nuts and how the stock market's going to crash and so on. So that's almost like proof alone that it's not going to happen. But we do have to always be ready for that because it could. And we don't want to have a whole bunch of money at risk going into something that we know will at least have some decent volatility. Now, on the flip side of that, is going to be the fact that the market could take off and go straight to the moon. And all of our trades are bullish. I only believe in bullish trades. And that might change if, the world really comes apart. But all of our positions are bullish. And so if things just take off and go straight up, we're going to be like, man, if I would have left all those trades open, I could have made $1 million. It's just what you get in trading. Trading is full of what ifs and looking back at charts and frustration and all that good stuff. So we want to make sure that, that all we can do is, we can't control the outcome of the market, but we can control our risk. And so that's kind of my disclaimer for today, right? Which is, we're not too far out. I don't know what the date is today. Do we know the date? October 22nd. So it's October 22nd. We're just about 2 weeks out from the election, give or take. And let's just sit back. This is a great time to do some long walks in the park and just take it easy. Okay, so that's my disclaimer for right now. Thin and trim positions and reduce risk because that's going to just be so incredibly important for the coming couple of weeks. All right, let's go to the screen here and see what we have going on with all of this stuff. So here we have a couple of things to kind of keep in mind, and that is, I want to talk a little bit about technical analysis today, and I'm all ears, by the way, guys. If you have any specific questions, any specific comments, any specific things that you have, come across that you're uncertain about or whatever, please type them into the chat. Any kind of interaction you guys put in and any questions you guys have typically benefits other people. Somebody told me that I was talking to the other day, they said, during one of the recent webinars, you talked about something and you were asking people specifically to just say if they understood it or didn't understand it. And this person said, I was surprised at how many people didn't understand one of the things that you talk about a lot. And it was really beneficial for them to say they didn't understand it because then it helped, all of us learn a little bit more. So that's always a really good thing. If you have the question, if you're thinking to yourself, if you're over there and you're thinking, here I am, I'm Amy, I'm Jim, I'm Sharon, I'm Ray, and I have this question about this certain thing, and I'm too embarrassed to ask it because it's going to make me look like I don't know what I'm doing. Well, if you have the question, probably 80% of everyone else has the same question, but they don't want to ask it either. So I don't know the questions you have if you don't tell me. So let's do that. But tell me this, guys. I want to kind of discuss this with you for a moment. We have spent the last several webinars talking about the strategy, how to calculate our break evens, how to look at covered calls, how we trade this whole thing, the multi-step process, all of that stuff. And it's all recorded. And usually what I will do for a Thursday night webinar is I take kind of the most misunderstood concept that we use or the most asked question, and I try to put it into the webinar and I try to discuss it kind of with everybody. And what I've come across is this week, maybe I just met with less people this week, which I think is probably the case as well, but this week I don't feel like there was as many questions. Everyone seems to be kind of cruising along and learning what we're doing and so on. So I don't want to repeat myself too terribly often. So that's why I wanted to spend a little bit of time looking at the charts today and rehashing a bit of what we want to see when we're trading, right? What do we want to see when we're trading? Where are we going to find some of our best odds and best opportunities? Does everyone feel okay about that? Does anybody have any specific questions they want to bring up before we get to that? Okay, so thanks, Jim. I'm glad they've helped. That's excellent, and I'm glad you guys are watching the recordings. I hope they are helpful. I hope they're helping solidify everything that we're doing. So yes, Mel. Yep, that's right. We're just kind of waiting on expirations, and trust me, I am very anxious. I'm like chomping at the bit because I see so many good charts, and I'll tell you why these charts look good, and that's going to tie into this technical analysis thing. But I see so many charts that look good, and I think, ooh, I'm just not going to jump in front of the bus here and jump in on these trades. I'm happy, not happy. I never want to miss out on money, but I'm happy to reduce the risk, let the volatility pass, whatever it may be. Maybe it's a little, maybe it's a lot, I don't know, and then we'll get back on the horse, so to speak. So that's what we're looking for. Okay, a couple of questions here. Raymond, trying to mentally grasp why a stock from a sell to open put option gets assigned when it expires below trading, but coming up empty. That's great, right? That's a good big-ish explanation. The thing that I wouldn't worry about too much is the why. Worry so much, spend your time, because as you're kind of new to the concepts, just instead of why, just remember what. Just understand what. So for example, if I have a sell to open put that you're referring to here, Ray. If I have a sell to open put on its own, and at expiration the stock is below here, I don't have to let it run till expiration. I can close it before expiration and I'm fine. But if I let it run till expiration, that gives the broker the green light to put me the stock, to assign me the put. There's a much bigger explanation that goes with that. We'll get into that. But just remember, you don't have to get put the stock. You don't have to be required to buy the stock. But if you let it run till expiration, you will be required to buy the stock. If you end up above that sell to open put strike price, then you just get the profit and you don't have to buy the stock. That's what I would focus on right now. I wouldn't focus so much on why exactly that happens. There are good explanations and good reasons for that, but just focus on the fact that if I have a naked sell to open put and I'm below the strike price at expiration, I'm going to have to buy the stock. That's it, because we want to keep it kind of simple. We don't want to get too caught up in the, in the workings of it yet. We'll get there. We'll definitely get there, but we want to make sure that we just understand that. Now, remember, with a credit spread, if you have a sell to open and a buy to open put, then that doesn't let the broker assign you, right? So if you have that protection down there, you just take your loss, and that doesn't assign you. So on its own, you get assigned, you have to buy the stock. With a buy to open and a sell to open, you don't have to buy the stock. You just take the loss, and it's usually pretty small and so on. So again, focus on the what, not so much the why. We'll get to the why. Okay, I hope that's satisfactory for you, Ray. And I'm not trying to be dismissive of your question, but option trading is infamously complicated, and there's so much stuff that can literally blow our minds when it comes to option trading. That we just kind of need to know what happens, and as we go, we'll be understanding it more and more. Okay, all right, that's a good question. Mel, we need something to trade on November 5th. Yeah, no kidding, right? I like the recordings because I can keep going back over the info. Lee, I'm great. I'm happy that that's working out for you. That's awesome. That's really, really good. Patience pays. There's always another trade. That's absolutely true. Peggy, for sure. Thanks, Sharon. Great response. What do you do when both legs go in the money? Amy, that's what I was just referring to is if we have a credit spread, a bullish credit spread, and both legs are in the money, we're just in max loss. We just take our loss if that's what we were going to do, but that's not what we do. We embark in our strategy. So when both legs are in the money, that's when we drop the long leg, get assigned, own the stock, sell an option, turn into a covered call, and so on. Okay, so good. Other questions? These are all good. These are all good questions, guys. I'll keep wetting my whistle. This is water, by the way. See what that says? Hydrate or die. I only got this because it was like maybe $10 or something, and I'm not that serious about hydrating. I don't think you die if it doesn't happen. But okay, so here's what we want to look at with typical stocks under typical market conditions, right? So one thing that came up this week when I was looking over some stocks and kind of looking over some details and so on. This came up right here, which is people, showing me some charts, talking to me about some stuff and saying, hey, here is a stock that I think I should trade, right? Let's use our strategy on this one, right? And for example, we have these kinds of stocks like ExxonMobil, right? And ExxonMobil is a pretty infamously, hold on here. We got some people trying to log in. There we go. Okay, there we are. ExxonMobil and the rest of the kind of oil-driven stocks are having a heck of a time. So what do we do with stocks that are downtrending, right? And this is kind of something that has come up a little bit this week, and so I think it's worth addressing. These oil stocks, they're in a little bit of a downtrend. They're in a little bit of this decline. And I wouldn't even say a little bit. I'd say a pretty lot of it, right? Exxon back here was trading, about a year and a half ago was trading at $82, $83, and now they're trading at $34, right? So that's a pretty big loss in market cap. But the one thing that I see people doing is buying puts, right? Buying puts on these kind of stocks and saying, okay, let's trade these down because, Exxon's in this big Exxon and, COP, right? ConocoPhillips. Who just bought, was it ConocoPhillips that just bought some other oil producing company that for $9 billion? Anyways, CVX, right? Chevron, all these guys kind of have the same looking chart. So if we look at like Exxon, we say, okay, our strategy says we do fine if the market goes up, we make our money, right? If it goes down, we own the stock and we have a nice little bit of profit from our option trades to offset that drop in stock price so that we can still own the stock at basically the current price of the stock, right? So that's all good. But when we look at these kinds of stocks, and when we look at something in particular where we say, okay, this 200 moving average is super important, right? This is our long-term kind of trending moving average. So we want to keep an eye on the 200 exponential moving average. Super important. So when I look at that and I say, okay, that is above, and that is pushing the chart. That's indicative of, some pretty big downward pressure here. We got some pretty big downward pressure. So when I see that kind of thing, I think, that's probably going to just continue on down. So with a long-term downtrend like that, I probably don't want to use this strategy on this because yes, I can offset the declining stock price with the option profit. Great. But if this thing's in such a downtrend, it's probably just going to continue down. And at some point, my option has to expire. And at some point, I have to get assigned the stock. And at some point, this is just going to probably continue dipping lower. So the one thing in particular that I want you to look for is this 200 exponential moving average. Now, just to make sure, everyone should have this on their charts, but just to make sure, EMA, and that is exponential, there we go, moving average. So that's what I want you guys to make sure you all have on your charts, because when we're looking for a stock that has a better chance to kind of flow a little bit, right? Just kind of go in the direction we want it to go. It's not going to be something that's below the 200 moving average. So remember, you can go to your stock screener here, which is right there. So you can go to your stock screener, and one thing that I will do, I've shared this with you guys a couple of times before, and I'm happy to share it with you again. One thing that I'll do is I'll just make sure that whatever stock I'm looking at, there's my stock screener, that's the link for it right there. Whatever stock I'm looking at, sometimes I'll reduce the list a little bit. Right now, under $50, you know, a million shares traded, all that stuff, it's giving me 335 stocks. But if I say, well, actually, I only want to see the stocks that are above the 200 moving average. And that reduces it by almost half. Still, I have a lot of stocks to look at, but these are all going to be stocks that are above that moving average, right? They're going to be stocks that they're making better runs. Look at Alcoa. We've had some Alcoa trades lately that have run really well. So we have ExxonMobil below the moving average. This is telling us long-term downtrending is probably going to continue. But we look at something like Alcoa and we say, okay, this thing is slowly trying to creep higher, right? It's slowly trying to kind of get up there. And it's had some runs up above the moving average. It's back down. Another run up above the moving average, and it'll you know, probably chop up and down a little bit before we finally get the big cross. But that's telling us that we have momentum on our side. Look at a stock like, what's a nice little stock that's just been, you know, fairly cheap and running fairly well. American Eagle Outfitters, right? This thing was in a big long downtrend from about May of 2019. This made its last dip below the 200 moving average, and it pretty much stayed there till it got a real good move up in about August of 2020. So for over a year, it was below that moving average. Now, we could have used our strategy down here anytime, but this thing just kept dropping and dropping, and we would have just been fighting a trade and fighting the flow. And we don't want to fight the flow. We want to try to go with the momentum. And that 200 moving average, this guy all on its own, is going to tell us a lot. That red line, that 200 exponential moving average, is going to tell us a lot about something that's got some good momentum. So remember, if you're using these kinds of indicators, here are some of the things that I like to look at. Oops. So I like to look at, number one, stock is above the moving averages. And I use the 200 and the 50. So I want to see that. Number two, I want to see stochastic, right? Low heading higher. So it's got to be low. It's got to have some room to head higher, but it's got to be low and running up. I want to see that there is some sort of trend, right? Particularly uptrend. So we want to make sure that there's some trend that's kind of helping us to identify or helping us to say, hey, this is the flow, this is the way things are going, and it should continue on. And of course, I'm going to be looking for things like support and resistance. So I want to make sure I'm not trading into an all-time high. Let's go look at one of those examples here in just a moment. But as I look at this and I say, okay, so here are the things that I want to see. And you see that we have this kind of situation in the works, right? Stock is above the moving averages. It crossed over back here just a couple of months ago. It's above the moving average. Guys, give me just 2 seconds here. 2 seconds. And I will be right back with you. Okay. All right, we're back. Sorry, I'm back. Are we good on sound? Are we back in sound? Everything good. Everything good. All right. So we want to make sure that stocks are doing this kind of thing, right? So you look at something like American Eagle, and of course we can add in here, you know, one of my favorites. We've been talking about these, and we've talked about the kind of limited use of these, but patterns, right? Because you can see that pattern right here on American Eagle, which is a rounded bottom, neckline break. So stochastics are low, heading higher. We're above the 200 moving average. We've had the 50 and the 200 cross. Jim, we're going to go over and I'm going to show an example of support and resistance and why it's important. But here's an example of support and resistance, right? This is our neckline. This is kind of this little area on American Eagle that's been holding pretty strong, right? So this is some support down here and big resistance here, and then it's held all through kind of here, right? So we want to make sure we can clear those support and resistance levels before we are, before we're trying to get kind of a big move out of this. So American Eagle had this nice little run right here, and it just tried to clear that, and it ended up dipping back down below. But once we start getting some really good clearance of this resistance, and we start getting on the other side of that resistance level, now we have, you know, the floodgates are open, so to speak, and now we should see a nice little move higher on this stock, right? So support and resistance levels. If I'm looking at this right here, I'm going to say I don't super want to trade this right here because I'm coming up to a major resistance level, and it might do good, it might not do good. We have stochastics looking good, and we're above the moving averages. But as we're heading into that resistance level, there's going to be some problems, right? I'm probably going to hit some hard times there, and it might come back down on me. But when I'm up above this moving average, I've got the momentum on my side. I've got the trend on my side, and that's where we want to be with everything. Is running with kind of the flow of the market. So there's a good example. Look at Netflix, right? What do we have happening on Netflix? We've looked at this one a little bit here. Netflix is above the moving averages, very nicely above the moving averages. Stochastics are low. They're not quite heading higher yet, but they are low, and they have plenty of room to kind of start this little situation down there, right? But what does Netflix has? What does Netflix have? Oh, complicated. Netflix has a big double top, right? This is big resistance up here. So we have a big high, you know, a lower high, and then that big double top. This tells us that even though that this thing is above the moving averages and we have a low stochastic, there is very possibly and very probably some continued downside movement coming on this one. Now, number one, I'm not going to trade Netflix because it's too expensive of a stock, and I don't want to mess with those ones, and I don't want you guys to mess with those ones because there's a lot of risk with those. But number two, just as a chart pattern and as an example here, I look at this and I think, okay, even though everything looks okay on the indicators, this isn't a stock that I want to try to be trading because we're still on the wrong side of, of that resistance level. So I would rather trade Netflix after a real big pullback, right? Let's say we're going to trade this one. I'd say let Netflix pull back, right? And get above the moving averages and get back up there and give me a reason to get into it. Or I would rather trade Netflix up here, right? I'd rather trade Netflix at a higher price above that resistance than try to battle and see how long it's going to take to get through that resistance. So I kind of don't want to mess around with, I'm bumping my head into a major area there because that's just going to kind of complicate things. Another great example here, Southwest Airlines. You guys know that I'm just the biggest fan of the airlines. The airlines had a good day today. So Southwest is another one of those examples. Here's Southwest sitting right at big resistance. We've got a big neckline right here. But look at this. It's just getting above the 200 moving average. Just getting above 200 moving average. But look where our stochastic indicator is right here, right? It's a little bit high, and we haven't cleared that resistance yet. So I want to let this thing, it might just break and pull back just a little bit, give us a nice chance to let that stochastic kind of dip back down so it can start heading back up, and trade something along those lines, right? So Southwest is a fine one to get into right now, and I think the airlines have nothing but potential ahead, but I would rather trade Southwest up here than take my chances with this thing really chopping around that resistance level. So so we want to find things that, again, where was our example? What was the stock we were looking at? Was it Alcoa? Oops. Where did we write a bunch of stuff? Oh, I can't even remember now. Someone help me out. I'm getting elderly here. But anyway, we want to make sure that we've got all those things in line, right? Oh yeah, thank you. Hey, there we go. Thanks, Sharon. I think I have a brain block. If I talk about a stock and then I move on, if more than a minute passes, I can't remember where I was. So we want to make sure we're above those moving averages. We're not trading into a major resistance level. The major resistance levels are problems, right? Because that's going to be where we're going to be encountering a lot of congestion, consolidation, choppy market movements. So we just want to be above those moving averages. Stochastics has a lot of room to run. We have a pattern and a trend that's supporting that upward direction that we're trading, and away we go. And so that's the kind of technical analysis that I want to make sure that everyone is using. Just very simple technical analysis, right? I trade currencies a lot, and currencies love technical analysis in both directions, right? We can look at big bearish patterns, we can look at big bullish patterns, it's all good. I don't like as much stocks on the technical analysis bearish side of things, because what ends up happening is bearish patterns on stocks tend to not really play out, right? If I'm looking at a bearish pattern on a currency, right? This is the Australian dollar versus the Canadian dollar. We have a lot of missed targets down here. We have a nice rounded top, and I'm just looking for this thing to kind of fall off a cliff, right? I would never look for a stock to do the same thing, because whenever a stock price goes down, everybody and everything with the powers that be are doing what they can to get that stock price back up again, right? But that's not the case with currencies or futures or any of those other things. So stocks try to go up always. Currencies have to go up to some degree. They have to go down to some degree. So, if we look at like a recent trade that we're in, this one right here could be looked at. If this were a currency trade, I would be looking for a big bearish pattern to play out, right? I would look at this and I'd say, there we go. I'd say, look at this. This feels like a very bearish head and shoulders pattern. There we go. I just, if that were a currency, I'd be looking to trade the heck out of that thing down. It may still come down. But since it's a stock, I'm not going to look for it to come down. If it starts breaking through some of these, key levels, right? Some of these key support levels, we say, okay, here's a trend line. Here's kind of a neckline for that head and shoulders pattern. If it starts breaking below that, it could pick up a little bit of momentum, but I'm still not going to get bearish on it. We're still above the moving averages. We still have some stochastics that are low and ready to head higher. And we have every reason to believe that this should be able to continue up. An example of this would be in Alcoa, right? Alcoa actually looks like a bit of a bearish head and shoulders pattern, right? This thing looks like a big head and shoulders pattern right here. Bump, bump, and then maybe it's going to create the right shoulder. Maybe it does, maybe it doesn't. We've been bullish in Alcoa for a couple of weeks. We're making pretty good money on this trade, staying on the bullish side. And all it did, instead of, again, in the currency market side of things, we probably would have seen that break out and continue down, right? It's creating a head and shoulders pattern. Let's break that neckline. Let's go for it. But on the stock side of things, it hits that neckline, and it just continues higher, right? This thing just kind of continues running up and making a move for it. So when I look at that, I think, okay, let's stay on the bullish side of things when it comes to technical analysis and when it comes to the stocks, right, that we're looking at. But let's make sure that we are incorporating these couple of steps right here. So we know what our strategy is, right? We've talked about the strategy over and over and over again. We're pretty good on what the strategy is. So we know what that is, but we want to make sure that when we are ready to execute these trades, that we kind of go through a simple checklist, right? Is the stock above the moving averages? Is stochastic low and heading higher? Is there an uptrend? Am I coming into a major support or resistance level? And in this case, it's pretty much always going to be resistance, right? Are we coming into a big level up above? And what patterns do we have supporting this? Now, going back over here to ExxonMobil, where we say, look, we don't want to trade this thing. Stochastics are low and heading higher, but we don't want to trade this because it's way down here below, you know, that long-term 200 moving average. But we might look at this and say, well, at the same time, you know, maybe this is going to be a big double bottom, right? Maybe this is the low for Exxon, and they're going to head up, right? The company is turning things around, and we're going back to oil and all this stuff. By the way, has everyone seen the commercial for the new, you guys remember GM made that H2 Hummer that was like, you know, the big square machine that weighed 99,000 pounds and got 3 miles a gallon or something like that? You guys remember those old H2s? Those that they discontinued like a decade ago. I just saw a commercial or an ad or whatever on the internet that they've now made an electric one. So they took the biggest environmentally destroying, gas unfriendly machine and turned it electric, turned it to an electric SUV. So we'll see about that. So, you know, and that's another thing that makes me kind of, you know, skeptical and or wondering how these oil companies are going to make the big comeback that we all hope that they're going to make. Is everything going to just slowly be working its way away from oil and petroleum and all of that stuff? I don't know. We'll see. But we look at a stock like this and we say, maybe it's a double bottom. And if it is, super great. That's so great. What we want to see still is moving average. Let's get that 50 crossing up. Let's get stochastics, you know, running higher. Let's get above those moving averages. Let's get up here in this little area where we're back on the right side of that flow, of that momentum. I've spent a lot of time in my trading kind of fighting trends and looking for big reversals. And that works well in certain markets. It does take a lot of patience, but you can catch really big movements that way. But it does take a lot of patience, right? And when we're talking stocks, we could be tying up, you know, really, really big amounts of money waiting for something to turn around. So let's not do that. Let's just find things that are above the moving averages, that have some stochastics moving higher, that are not headed into a major resistance level, and have somewhat of a recognizable uptrend in play. And, you know, again, any kind of bullish patterns in there that we can add to that will only help the process. So that's a bit of what I wanted to talk about today. Now, we have plenty of time. We have no major rush, but I wanted to make sure that we know generally what we're looking for on charts. So let's go back over here for just a moment to AEO and just give everyone a chance to kind of look at that and think about that chart. I'm gonna copy this and I'm gonna post this in here for you guys so you can, you know, have that to keep, bookmark, save that, just so you can remember what are the 5 things that we want to make sure that we're looking for when it comes to just our basic technical analysis. Make this kind of second nature and make sure that, oh, hold on, make sure that it's so natural and so normal. So, sorry guys, technical difficulties here. So you know, I want to make sure that that's just part of your everyday trading strategy, is just to look for those kinds of things on any chart that you're looking at. Everyone clear on that? Does anybody have any questions, thoughts, comments, anything that you want to bring up in relation to that? Because once we get this piece down and we've got the strategy of a credit spread, taking assignment, writing covered calls, and we put those 2 things together, honestly, we're going to have such an unstoppable strategy that it's kind of ridiculous. So we're not looking to be, the Robin Hood traders that everyone reads about that, are driving up all these crazy stocks and making 100% a day and so on. And we're also not going to be what a lot of the average traders are doing, which is just losing money, right? We're going to be using a strategy that's going to help us find an easy flow and an easy rhythm to get into. Because remember, when we're trading stocks, literally all the odds are against us. We're predicting the future. We're dealing with an uncertain market. We're putting money on the line. The smallest little things can cost us a lot. And so when we can kind of just say, what are the most important things we need to look for? Something that's trending up, something that's got upward momentum, because then we can incorporate a strategy that is very favorable to even a remotely moving higher kind of market. So those are the things I want to make sure that we're making second nature here. Amy, do you look at daily charts only for stocks or 4-hour charts as well as FX? So whatever I'm looking at, if I'm looking at currencies, if I'm looking at stocks and currencies and everything, I always want to look at daily and weekly charts to find major levels, right? So one of the reasons that I'll look at daily charts and weekly charts a lot on stocks is because weekly charts on stocks, because stocks, remember, print one candle a day, 5 days a week, right? And so a daily chart gives us kind of limited information. Currencies are printing, more daily candles, more 4-hour candles, more 1-hour candles, because the market's open 24 hours a day. And so I want to make sure that I'm looking at as large of a time frame as possible to get those support and resistance levels. But yes, it's always going to be daily and weekly charts to get those big levels. And then we'll dial it down from there, support and resistance levels on 4-hour, 1-hour charts and so on. But definitely on daily and weekly charts. Good question. Jim, all good. But are we not trading right now? We're not trading right now. This is for later. Yes, Jim. Yep. So, let's get a massive watch list ready, right? The markets are likely, here's my prediction, and unfortunately this is recorded so people can hold me to this. I'm going to bet that the market does nothing. I'm going to bet that it does nothing. Everybody's waiting for the big sell-off and the big crash, so that's pretty much not going to happen. And I think there's going to be too much uncertainty either way for it to rally like crazy. So I think going through the election, the market will do nothing. It'll go sideways, it'll do nothing. If it does nothing, and if we don't get a big crash and a big dip from the volatility, then we want to have several stocks, like a lot of stocks, ready to be traded with this strategy, meeting this criteria right here, so that when we get through that and the market's just kind of flat and not doing much, we can be ready at a moment's notice to jump in and start, taking advantage of the market, saying, okay, well, whoever ends up in office and whatever's said and whatever's done, we at least have that behind us. Let's go. And the market will likely continue on these bullish patterns that we see here on AEO, that we see on Southwest, that we see on a lot of these gold stocks and all these other ones. So that's kind of where I see things going. But yes, we do want to kind of sit it out right now and not take the extra risk while we're waiting for the news and all the stuff to happen. Peggy, not only that, the election will not be over on the 3rd. Yeah, that's true. I'm sure there's going to be a lot of fighting about this one. Here is my only political statement that I'll make, because I know people are very steadfast in their political beliefs, which I respect, by the way. I find myself very, very frustrated with politics because I feel like these adults behave like my kids do. I think my kids probably behave better than these people that are supposed to be running our country. And that counts for all political parties, right? I think the fighting and the craziness that will probably happen after this election, the market is totally priced in and is totally expecting. And so it's going to be ridiculous. But again, I think the market has priced that in. The fact that whoever wins, there's going to be a fight about it. There's going to be uncertainty afterwards. And I'm just looking for things to go sideways. And I bet they do. Yes, so Lee, consumer defensive stocks, Walmart, Kroger, and will they stay steady no matter who wins? Yeah, I mean, I think stocks like those will do fine. You know, honestly, I mean, I've got a trade on KHC, right, which is Kraft Heinz. What's this stock going to do? Probably just continue higher. You know, what's going to happen with ketchup? You know, is is Trump staying in office or Biden coming into office going to really kill the ketchup sales? You know, I mean, probably not. So I think I do like grocery stores. I do like consumer. This is why we're going with kind of the consumer retail stuff, is because those are absolute necessity stocks, and I think they're going to be fine. So I think things like KHC and like Kroger, right? These guys are probably going to do well. They've been a little choppy and messy. Walmart, you know, probably just going to continue going up, and then you know, and so on. So yeah, I mean, I think all these stocks have good potential and good possibility of continuing higher. But some of the retail stocks get a little bit expensive, so that's why we got to be a little careful. You know, Costco, Walmart, some of those stocks are, you know, in the 100 plus, 300 plus kind of range, and so I won't be trading those as much. But definitely, you know, I like Kroger, I like Kohl's. You know, these stocks we've talked about, right? Kohl's is just that example right there. We're saying, okay, lots of consolidation, get it above the moving average. Let's get that momentum on our side and start looking for opportunities to trade all this up. Yes, Mel, Clark's big. Yeah, I think so. I think absolutely. So, yeah, I mean, those kinds of things. You know, food and retail related stocks. You know, the show must go on, right? People have to buy stuff, so I think those stocks are gonna do well. I think banking stocks. I think airline stocks. I think hotel stocks. I think those all have big opportunity in them, but it's going to take a little bit of time for those guys to come back. Here is one. I just got an email, by the way. What am I doing? Oh, there we go. I just got an email from Disneyland. We still have our annual passes there, even though we're not in California now. We still got our annual passes, and they're saying we can't seem to open up Disneyland. And we're really sorry about it. California is a ridiculous place. California is my home state, born and raised there, lived there for 99% of my life. But California is going crazy, and they're not going to let Disneyland open for the rest of this year. And so they're saying, oh, this is really terrible for us. But their stock seems to be holding fairly steady. So we'll see how it goes. Lee, we will need Clorox cleanup after this election. That's the truth. That is the truth. I've always heard invest in what you buy. You know, that's an interesting concept, Peggy. A lot of people say that, you know, buy stocks and products you know. The problem is sometimes we love a product. How many times have you guys been so disappointed because a company you love goes out of business, or a show you love gets canceled, or a product you love gets canceled? So I wouldn't necessarily buy things you like, because all of our opinions vary so much. In fact, I would specifically stay away from just buying things you like. Buy things that meet the criteria, right? That have a trend and are above moving averages and have some good things happening. There's plenty of stock that shouldn't do well and do amazing, and stocks that should be doing amazing and aren't. So best to just take, this is why, you know, a few webinars back we talked about news, right? Don't watch the news, don't pay attention to the news when it comes to trading, because whatever they say in the news, whether the whole economy is crashing and we're going to cryptocurrencies or whatever else is going to happen, for lack of a better term, it's pure lies. So just don't pay attention to that stuff. Look at the charts, trade the charts. It's that simple. Trade what you see. Don't trade what you think. Don't trade what the news is feeding our brains with. Trade what you see. That's the best advice I can give anybody, is look at these charts, you know, and that's why I wanted to kind of talk about technical analysis today, because the thing that I have heard so much lately is the market's going to crash, the election's going to be a disaster, all this stuff. All very true, all very possible, all very maybe. But all I can do is just trade what I see. I count on predictions about as much as I count on, you know, whatever, the most unpredictable thing ever. So don't, you know, don't get caught in that trap. Just trade what you see on the charts. Okay. Yeah, Mel. Yep. California's making some progress. Hopefully, the numbers are going down. Okay, good. All right, guys. I think that's all I have. Do you guys have any other questions or comments? Anything else you want to bring up before we wrap it up? If not, I think we can kind of wrap it up there and leave it at that. Thank you for being on with us today, guys. Very lovely to see you all and be with you all, and appreciate your time. Thank you, Sharon. Nice of you to say. Thank you. And hopefully this was some helpful information, and we'll help you guys just kind of stay on track for the next stock trade you take. Thanks, everybody. Take care. Have a wonderful and fantastic rest of your evening. Thanks, Peggy, David, Lenny. Good to see you guys. Mel, good to see everybody. Lee, Dale, nice to see you. Take care, guys. Have a wonderful evening. More details are coming. Thanks, guys. Take care, everyone.